So as Auntie said, I'm with CGI. I am the global industry lead for the retail banking and wealth management industries. And I'm coming to you today with a perspective on the consumer view of life in the fintech and open banking world. And my goal today is to get you some level of fear and hope. And different ones of you will walk away with different levels of fear and hope. But if you don't have a mix of those two thoughts or emotions, then maybe I didn't do a great job. But the consumer view should give you both, no matter what world you come from. If you come from the fintech world, the provider world, or the banking world, all these things should give you some level of each of those emotions. Just quick background on me. As I mentioned, I'm with CGI, and I've been with CGI for a couple of years now. I spent most of my life either working within the banking industry at a couple of large U.S. banks, SunTrust and Capital One, or serving as a consultant or provider to the industry, particularly in the consulting side and primarily in the U.S. and in Canada as well as Europe. So just a quick background as well for those of you who don't know CGI, before I get into the results and the insights. CGI is a global firm, obviously a strong presence in the Nordics and Europe, and then a big presence as well in Canada and the U.S. and North America. We serve many of the large banks. We serve 23 of the top 25 banks in both Europe and in North America. So strong presence there. We provide solutions as well as services. And one of the things that we are really keen on is in the thought leadership space is to make sure that we're adding to insights for our clients. And a big part of that is actually going to the market and doing our own thought leadership, our own primary research. We do it in the corporate space. That's something we'll launch later in this year with Sybos that we do, where we go out and talk to corporates and to businesses as well as to corporate banking experts. And we find some of the similar themes. And the themes I'll talk about on the consumer side today, I might highlight a couple of the nuggets that go with some of the commercial banking themes as well, because there's some similar trends emerging here. But we've been doing this digital research and consumer research for the past 4 years. This is the fourth of these years. And this year we have a bit of an aggregation of some of the concepts that we've looked at over the last 4 years. Last year I rolled out the results, which are very fintech oriented, at Money 2020 Europe. So our new theme, I guess, is that we debut our results, because this is the debut of our 2017 study, that we do it in the Nordics. So I guess we'll have to find a different venue next year, somewhere in the Nordics again, to debut our findings. But the key message here, as Auntie said, there are plenty of researchers who go out and they talk to the bankers, they talk to the fintech firms, and the VCs vote with their money. So we sort of know where those guys think and what their perspectives are, where they're moving, sometimes as a herd and sometimes as individual organizations. But the consumer perspective is incredibly important, and it's the often lost perspective, because at the end of the day, consumers are going to vote with their feet, vote with their dollars in choosing providers and in choosing where they're going to put their money. And without that lens about what they think, I think that a lot of people tend to miss perspectives and miss some of the key insights that can provide. So that's the lens that we're going to look at today. Our research this year, we expanded to include Finland. And so we'll talk about results globally as well as the results that are Finland specific. So I'll show both of those when I show some of the findings. You see the countries covered here. We kind of span the spectrum of hit all the continents. So we have Asia Pacific in there. We have obviously a lot of Europe, and then we hit US and Canada and North America. So starting with the core question about what do consumers think about the fintech solutions. And again, this is something that we did last year, asking about fintech concepts. We put forward fintech concepts, in this case, put 10 forward, and we didn't use these words, right, because these tend to be banking words, and consumers don't understand those words. Robo-advice. If you said, what do you think about robo-advice? Most people would look at you like you had two heads, right? They wouldn't have any idea what you're talking about. So we put those in sentences, 1 or 2 sentences that describes what the concept is. We put that concept in front of consumers. Here are the 10 that we tested, and as you see, it ranges from things that exist today in the marketplace, like robo-advice, peer-to-peer lending, but also some emerging or some newer concepts. I think the bartering service is an interesting one. It says, would you like a way to exchange goods or services without exchanging money? And would there be, if there was a platform, would you use it? So those kind of questions. So we kind of got out there with some crazier ideas, but also some more standard ideas. And we started with the core question of, do you actually see value? Because if the consumer doesn't see value, there's no point in asking deeper questions. And what we found here is shown right here, which is essentially a wide range, right? A really wide range of perspectives about where the value is in these concepts. And at the top of the list, pretty much 4 out of 5 consumers globally say some form of protection service would be really valuable to me. And this highlights the fact that there's a lot of fear out there. We ask about fear as well. And what you find is that consumers are terrified about cyber attacks, this weekend being obviously a reminder of that, about identity theft, about fraud, and money fraud, things like that. So these things are big concerns, which is the reason that protection's here at the top of the list. You also see, interestingly, personal financial management, PFM, the ability to see all of my financial relationships in one place, highly valuable as well. At the other extreme, you see robo-advice and peer-to-peer lending. Again, a couple of that, if you heard my comments before in the hub, the fireside chat, I brought up the fact that these are the ones that have had the most ingestion of money, right? Fintechs, there's dozens and dozens of them in each of these spaces. And a lot of it's because that's where the money is. That's where the profit pool is. That's where they're going after it. But also, I like to say, if I told you that there was a market that didn't exist and that 1/3 of consumers were interested in a proposition, you might be pretty interested in investing in that. There's money to be made. So even 1/3 of a market that didn't exist seems it seems like a pretty good dive. Now, if you don't want to be the 61st firm into these spaces where there's already penetration of a lot of firms, but initial firms putting money in there, VCs going in there, again, made a lot of sense. So this is the view of where the opportunity is. I also want to highlight the fact that obviously, see, there's a pretty significant difference in many of these cases between the global view and the view in Finland about where the value is. In aggregate, you see the Finland value perspective is lower than is the global perspective. And what we found is across these 9 countries, there's really a few buckets of countries. And I'm going to put the extreme energized about everything bucket. Singapore fits in that bucket. Singapore consumers, their view of all of these concepts is they're more valuable than anybody else. So that ranks highest as a country on all of these concepts that we've tested. The other extreme would be Finland and Sweden and the Nordic countries, where it's actually a lower level of energy. And again, you think about, well, why is that? And my speculation, my perspective is there's a few factors in there. One is just sort of culture and environment and conservatism that's embedded. There's also a view of what are the gaps, what are the things that are my unmet needs? Do I have high levels of unmet need? So there's like, how do you embrace innovation as one perspective, but also are there a lot of unmet financial services needs? And obviously in Singapore, they're embracing innovation and feel like there's a lot of unmet needs. And you have Singapore, Australia, US, UK, they're in that more forward-leaning bucket or more aggressively embracing these concepts. And then you have the other bucket of continental Europe and then the Nordic countries where they fit the more conservative. Canada also, interestingly, Canada fits more into that mode. Looks more like a Nordic market than they do look like, say, a U.S. market. So radically different perspective based on the culture there and, the banking environment there. But the other big trend I want to highlight here is the arrows. So these arrows show the trend from 2016 to 2017. And what you see is that, in general, there's an upward trend. So none of these are actually going down. There's increasing levels of interest in these concepts globally, which I think is a very important lens to say consumers are increasingly open to these new concepts, these new things that can help them manage their financial lives better. And that willingness, increasingly embracing these concepts is a big, important backdrop to the next view, because then we ask consumers, if you're interested and you see value, how would what would be your preferred provider of those? Would it be your current primary bank? Would it be another traditional bank? Maybe a tech company? Maybe your telco? What would be your preferred provider? And what we find is that, again, this year, my primary bank, so my current primary bank is the winner. So in over 50% in almost all cases globally, you see that the preferred provider is actually my current primary bank. Notably, Finland looks pretty similar to the market overall in most of these concepts, but some notable differences. But the big difference is the year-over-year change. So the radical difference, and you see all these numbers are all pointing down. And so there's been a decreased preference for my current primary bank to provide all of these concepts. So this is the fear part for you bankers out there. This is the part where you say, whoa, hold on. I like the fact that it's more than 50%, but I'm really worried that trend is going down, that on average 7.5% decrease in preference for my current primary bank. And this is going to be a big trend, that says, okay, if I wanted, before I've preferred my current primary bank, and the reasons that people give are 3 really primary reasons. Trust, I trust my primary bank. Value, I believe that if I like my bank today, they provide me good value. If I add another service, I'm going to get good value for that. And convenience, right? Just the fact that I may not want to increase the number of providers that I have today. So that complexity of my relationship, I want to just keep it simple. So these are the reasons people give for why they choose their primary bank. But again, we see that number going down. So this is a big, big sign. This is the hopeful part. If you're a fintech out there, this is when you see the hope. And you, again, if you're a banker, you see the fear, because that's the big trend there. Then we said, let's expand it with the advent of PSD2 and open banking. Let's actually expand this conversation to look at what are additional perspectives that consumers have about how open they are to third-party providers in general. And we put in front of them a bunch of these different things that one could leverage a third party for, and then ask, how open are they? Are you open to this, to a third-party provider? Would you provide them with your credentials, with the right, with the appropriate access to your account information and to your account in general for these types of services? And what you find here is that roughly half of consumers globally say yes, I'd be open to that. So there's an openness and a willingness to provide access to third-party providers for my banking services. So this is, again, one that's similar to what we just saw, right, on the fintech concepts, where there's a perspective that roughly half of consumers are open. And I think we'll look at this trend year over year, starting next year. This is a new question that we began asking. And I think we'll, again, see whether that trend is going to be continuing openness. Then looking at the Finland results, where you see that in general, Finland looks a little bit more open in many of these cases to these third-party providers. So there's Finnish consumers are saying, I'm more willing, perhaps than other markets, to actually provide, again, to open up my banking services to a third-party provider. And you get to the why. Why are people open to this? And I think the number here on the right-hand side is really important for us to say that well over half of consumers are saying that there's been some loss of relationship. They've lost that love and feeling. They say that personal connection between their bank is decaying. And that number is actually a lot higher in Finland than it is globally. So instead of 58%, it's 70% in Finland. So that explains a lot of this openness. Is I feel less connected to my bank, and as we saw earlier, I'm open. I want these new services. I want them. So if I want them and I'm less connected to my bank, why wouldn't I be open to a third party? I got some additional bad news. The bad news, that was bad news. This is some worse news for incumbents. And that's really looking at who am I going to hold accountable for issues. And I'll just focus on this top one. So ultimate responsibility sits with the bank. We ask consumers, who do you hold responsible for issues that happen even when you're using a third party? And 61% said, I'm still going to hold my bank accountable. So this is the bad news, right? This is really bad. It's the third party can come in, get the access. Consumers are happy to do that, but they're still going to hold the bank accountable. Now, as a former banker, I'm thinking that doesn't seem fair at all, right? This is the definition of unfair. You don't get it from me. You don't pay me for it, but yeah, you still hold me accountable. Like, this is the worst of all worlds. So I think that news is concerning. It does get to the fact that the importance of having your systems locked down, having the security in place, all the cyber protection, all those things are incredibly important. You have to provide them to your customers anyway. But regardless of the fact that you might, that the overall or the value-added provider may not be you're still going to be accountable. You're still going to have to provide. Your reputation is still on the line in providing all these services. At some level, the utility. I hate to use that word as a banker. I hate to use that utility that sits behind here. That perspective is still going to be there. That responsibility, that accountability is going to still lie with the bank. So that's the consumer point of view. And again, I think mix of hope and fear, but bottom line, increasing level of fear for incumbents, and probably an increasing level of hope for the fintech community. I want to also share some insights about what are the options and where are people headed in terms of the banking world. So what are banks, vendors, and providers looking to in this space? And this is a view of payments. We recently did some payments research in partnership with the FS Club and Chris Skinner out of the UK. And what we did is we talked to banks and providers in the space of payments, and we asked them a series of questions about basically, do you see consumers, being willing to go for these value-added payment services? Are customers going to be excited? Are they going to be willing to pay? and should infrastructure providers be in the game? What you find is that if you take the yeses, definitely yes, and the maybe, it's a pretty high level. So, approach over 80% of the mix says that those things are true, that customers are going to be willing to want these value-added services, that willing to pay for them, and that infrastructure providers ought to also be in the game. But the last question here, is enough attention being placed on these value-added payment services by banks? The predominant answer is no. Nearly 2 out of 3 of the respondents said, actually no. So we know these things are important, but we're actually not sufficiently focused on them. So that's a concern. Like why are we not putting the right strategic emphasis on them? Why are we not paying enough attention? On a related point, we get to PSD2. And I know you guys are all familiar with PSD2, much more so than your average North American person coming over. So, I don't want to go into what PSD2 is, but there's a whole spectrum of decisions that banks are going to have to make with respect to PSD2. And obviously, the first one isn't a decision. You've got to be compliant with PSD2. But the rest of them are. There are strategic decisions to be made as to how open, right? How much are you going to embrace open APIs and open banking and a broader ecosystem that's inclusive of fintechs and the banking community. So there's this real question about, is it just a compliance project, or is it actually a big strategic project? I strongly assert it is an important strategic project at the core, really, of what the bank is going to be in the future. I think that research that I just went through tells you that's really important. But I think in general, banks are underthinking this. And I'll give an example here. This is a case study that we've done recently. We've been working with one of the top European banks, and their PSD2 compliance began as an IT project. Let's get the IT folks and the compliance folks to make sure that they do it right, and we'll just meet the basic needs. We'll just check the box. And in fact, we realized that checking the box was likely to be a disaster. And we came in and then said, this is really a business and technology issue. It really starts with a business problem, a strategic problem, strategic question. And we brought together the business and the IT world to say, let's define a vision and a strategy for what we need to be with respect to open banking, and then begin to build a roadmap to go do that. Radically different than just the check in the box, be compliant. And out of that, that vision and strategy, now a full roadmap exists to go and do that. It includes a lot of the things that some leading banks are already doing, but it's also embracing it in a way that the bank had just never thought about. It was not at all on the agenda. It was not a strategic problem beforehand. So I think that's a really important dimension to say, if you're underthinking it today as a bank, you need to change that. This is not a compliance, this is not a tick the box and move on concept. This is a, essentially lifeblood of the bank and how the core to the future and how the bank is going to survive and thrive in the future. So I mentioned that I debuted our results last year at Money 2020. And this is the exact slide that I used to conclude my presentation last year. And it was, what's the message for banks? What's the message for fintechs? And the message that I had for banks was that this window of opportunity is open, right? Well over half of consumers prefer their current primary bank for these fintech concepts. That's a great message. Hope, hope, hope. And there's a real chance for you to take the lead. And I draw attention to innovation, number 3 here. I said, you should innovate internally and you should innovate externally with partners, right? How do you move that agenda forward? And really begin to meet these new needs, but to meet them in a way that still leverages the value, the trust, the brand that you've created. The message for fintechs was all about partnership, right? If you want to get access to the banking customer, the only way you're going to get that is really through the partnerships with banks, right? They have the customer access, they have that trust, perceived value, the perceived convenience. That's what you're going to have to go get. This year, and this is the changing message, I think the evolution, as we see consumers increasingly open to non-banks, increasingly open to third parties, that tells you a different story. And that's the story here. And that window of opportunity that I said was open last year is closing. Right? This trend, if it were to continue, let's just forecast that it's going to continue, that means that window of opportunity is closing. It's shutting. And so banks have to move much more quickly and aggressively than the message that I gave last year. And I'll use that, as I mentioned last year, number 3, innovation. Innovate internally, but primarily that focus needs to be externally, because that's going to be the way to accelerate. If you want to move quickly in innovation, partnerships are going to be essential to that. So the banking perspective needs to be accelerate, move faster, windows closing, and partner aggressively to get there. If you want to control your destiny, you've got to move quickly and partner. And so that's really about partnership and getting to market quickly. Don't take proofs of concept, don't do them for 6, 12, 18 months before you get them to market. You need to move more quickly. You need to put the pedal to the floor. On the fintech side, the theme is still partner, 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 but there's a slight tweak to that. And that's, if you look at the bottom here, put that energy into partnerships, but this openness or this increasing openness to the third parties tells you that maybe there is a window for the fintech or for a few fintechs to slip through and to still build customer-facing brands, which last year I was pretty sharply against. I think most of the big brands that were going to meet the consumer needs for banking had already in existence. I think there's still an open opportunity. That's, again, it's a small window, and only a few will get through. I don't think there's going to be a million unicorns created in this space. But I will say that this increasing openness tells you that if there are fintechs out there who can either build a brand or partner with a non-bank brand, there are other vehicles to get there in a way that just perhaps didn't exist a few years ago. And part of it's driven by regulation, but a big trend here is really the consumer changing the consumer perspective that says I'm more open to non-banks, I'm more open to others, and I want these services, and I'm willing to go get them wherever they're provided. So that's the summation of my view for the day, and it's a changing view because the consumer's perspectives are changing. And I'll be happy to take any conversation offline. I'll be around during lunch, so please find me. Happy to talk about it. We haven't published these results. As I said, we debuted them today. Our research from last year is out there online published. We'll be publishing our results over the next 6 to 8 weeks probably. So be looking for that, or find me, shoot me a note, and I'd be happy to have a conversation. We have the country-specific views. I mentioned the Finland stuff today. If there's another market that you're particularly interested in, we could talk about that separately. We won't publish country by country. We'll publish global results, but I can share insights particularly to individual countries if that happens to be of interest. So thank you for your time. I appreciate it, and I look forward to talking with you offline.